So the official inflation numbers were released this morning, and unfortunately, they were a little bit disappointing because they didn't come in where everybody was hoping that they would. The rate of consumer price inflation in the UK has dropped to 2.3%, which is down from 3.2% in March. So this is fantastic news in itself. The drop is significant, and we are very, very close to that 2% target. But the expectations amongst many economists was that inflation would come in at 2.1%. Now, there were hopes that if this number came in at 2.1% or perhaps a little bit lower, that at the next Bank of England meeting in June, that we might see the first base rate cut from the Monetary Policy Committee. But the hopes of that have now been dashed slightly. But all's not over yet, because the next set of inflation data comes out the day before the next MPC meeting, and we've also got interest rate decisions expected from the ECB and also the Federal Reserve. So all hope is not lost, because if that next set of inflation data does come in at 2% or below, then there is still a very, very good chance that we could see that rate cut at the June meeting. Now, we were asked for our opinions on this by the Evening Standard. So if you look on screen, here is the article, "The Blow to Interest Rate Cut Hopes as Inflation Remains Above the Bank of England Target." If you're watching on YouTube, there is going to be a link to this article in the video notes, so please do go take a look at it. But if I just quickly scroll down to show you my comments, you can see here, Craig Fish, director at East London mortgage broker Lodestone, said, "Close but no cigar is how this number can be described. A big drop, but not as much as hoped or expected by the Bank of England. As a result, it will likely be business as usual at the next MPC meeting, resulting in a holding base rate and misery for those with or looking for a mortgage. We live in hope of the next set of data." So there you have it. That's the update on the inflation figure. Now, I'd also like to cover off the latest house price data, because that was released by Land Registry today. The new reporting system from Land Registry covers not only house prices, but also private rental prices. For the purposes of this video, I am going to focus purely on the house prices. If we just scroll down slightly to the main points, you can see at the bottom here, average UK house prices increased by 1.8% in the 12 months to March 2024, up from a decrease of 0.2% in the 12 months to February 2024. So this, good news, quite positive, and it's probably not what a lot of people were expecting. Now, as I've said in many videos, we are at that point where we could start to see the Bank of England cut base rate, which in turn will hopefully have a positive impact on swap rates and therefore lender pricing. At the moment, it is currently a buyer's market, but when we start to see those rates dropping, I suspect that things will shift very quickly into a seller's market, and these price increases are likely to become more significant. So if you are in the market for a move of property right now, or even your first purchase, now actually might be the perfect time to start that process. We were again asked for our opinions on this by the press, and so here is another article in today's Evening Standard where again we featured talking about just this. Average London home price falls below the £500,000 mark, and that's because prices in London have actually fallen. So if we look, prices have now fallen by about 8% in 18 months since their peak in August 2020, but rents are still soaring by more than 10%. The average price of a home in London has fallen below the £500,000 mark for the first time since July 2021, according to the Land Registry data. Data from Land Registry shows UK house prices in March rose year on year for the first time since last summer, but property values in the capital continued to fall. London and the South East were the only regions where prices declined. I'll let you read the rest of the article because there will be a link to it, but again, scrolling down to my remarks, Craig Fish, director at Docklands-based Lodestone Mortgages, we are still witnessing many incidents of down valuations where asking prices are totally unrealistic. We're seeing lots of inquiries from those wishing to purchase, but until there is more confidence around the future of mortgage pricing, these inquiries are unlikely to convert into written business. The buy-to-let market is virtually non-existent at present, and whilst we are not witnessing a mass exodus, we are not seeing much new investment. So this goes back to what we've been saying about the reports where landlords are exiting the market. We're actually not witnessing that too much. Yes, we've got a few people that are selling up the odd property here and there, but I deal with many large portfolio landlords who would be classed as professional landlords, and they're not selling, but they're also not buying. They're just waiting until things settle down. So how are you finding the market? Are you looking for a property right now? What's the pricing like? Is it affordable because of the interest rates that we're seeing right now? And are you a landlord? Are you considering exiting the market? Are you putting your rents up? Any thoughts, any comments would really be appreciated, so please do drop them in the comment below. As you probably know, if you're a regular follower of me, if you're watching this video on YouTube, we are also on other forms of social media, namely TikTok, Instagram, and Facebook. It's probably wise, if you want the most up-to-date information from me, that you perhaps give me a follow on Instagram, because on there we do post when lenders change their rates and things like that. And if you're watching this on any other form of social media and not YouTube, then perhaps also go give me a follow on YouTube, because this type of long form content is more common on there, and we can actually also put the links to all of the reports that we mentioned and the newspaper article in our video notes. So if you want to be able to go read the article, then please go check us out on YouTube. But as always, thanks for your interest in the channel. It is greatly appreciated. But for now, take care.